I'm Jessica Minton for IB Times TV, and joining me today is Jonathan Corpina from Meridian Equity Partners, and he's going to talk about what to make of all of this data that has come out today. Thank you again for joining me. It's a pleasure to see you again.
Thank you.
So we've had so much data come out today. I'll start with housing starts. Now, housing starts did drop to about 16%, but building permits rose to a 5-year high. And every time I talk to you, you always talk about trends and patterns. Is this another case of just that?
I think it is, and I'm going to throw in conflicting data out there also for you as a term. When we see something like this, for us as professionals, we call it conflicting data. I wonder what it does to the Main Street investors who look at this information and try to make what this information means to them and what it means to our markets. But clearly, the numbers that we're seeing out of Washington, whether it's coming out from housing starts or about housing starts or permit numbers or unemployment numbers, or we'll go across the board, the trend of kind of gray information continues to be there. And that doesn't particularly hurt our market. It's just not really going to help our market. I think investors are looking for some more tangible economic factors that are out there to really help them believe in this rally. The numbers we got today clearly does not show us that.
And also today, that CPI number did come out, and as consumers, I would think, we might be able to stretch our paycheck a little bit more to buy services and goods, but is there a fear that if inflation falls too much, it could lead to deflation, and then the Fed might have to step up those interest policies to basically stimulate more borrowing?
Right, so we're trying to get away from the Fed stimulus stimulating our economy, and the numbers that we saw this morning is giving us a little bit of an insight where we might still need a little support that's there. What's also is tying into this is this all comes back to jobs and unemployment numbers, and all of this trickles, if you look at a spider web with unemployment in the middle, all these other different webs, lines that come out have different factors to it, and they're all connected to the unemployment number. And it comes to the fact that if there aren't jobs out there and we're not seeing sustainable growth in jobs, housing's not going to improve, spending's not going to improve, sentiment's not going to improve.
Also, we saw the Philly Fed manufacturing index contract, similar to the New York contraction as well, and it seems to be kind of all over the place. So to find a trend, it keeps alternating between positive and negative. What do we make of those manufacturing numbers?
It comes down to sentiment. It comes down to people, economies feeling comfortable with where we are, and we're not there just yet. It is a month-to-month factor that we look at, and some months are better than the others, but it just seems now that we're kind of in this nebulous area of trying to figure out exactly what our direction is going to be. Looking at the numbers this month and this week, not really helping that much. There have been other months that has helped us show direction, but not seeing it just yet. But take all this information, take a step back, and let's look at what it's done to the market. You look at the board now, it really hasn't affected our markets. We're still pretty flat today, and today would be considered the most negative news that we've seen in a long time. This trend is here in this market. It's going to continue to rally and move higher. Might be at a slower pace that we've seen before in the past, but I can't see something as of today that's really going to derail this market.
And finally, with jobless claims, they did jump, but it seems each week to week it also alternates. It's up, it's down, and I talked to you when the March jobs report came out, and it was very disappointing, but then in April, definitely surprised. So is this just another case of we need to look at these trends?
It is. You look at March when we were talking, it was 85,000. It's a barbell effect here. We're at one end, at either end at what point. So for this number to come in, I don't really think it matters where it comes in at this point, because investors are going to look at it as either a great number, a bad number, and either side of that trade you're on, you're not going to believe it if it's true or if it's not. So I think it's just going to take a little bit more diving deeper into numbers for investors to really feel more comfortable in where the trend in our unemployment is going. These numbers during the week do help, but it really comes down to the unemployment number at the end of the month.
Well, thank you again for joining me. It's a pleasure to see you again.